Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great weekend as we are kicking off our week in style the way we always do here at the Daily Market Commentary. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates as they happen. And we are down this morning about 2%. So let's go ahead and dive in to what's going on this morning. Before I dive in too deeply, I want to let everybody know about June 25th. So June 25th, we are having our next Traders Summit. This Traders Summit is called Mind Your Business, your trading business, that is. The idea is to, how do I treat trading truly like a business? And we've got myself, Corey Lane, Justin Krebs as our Traders Army presenters. But then we've got Al Davidson, who's a tax expert. He's a pro. He's the founder of ProTraderTax.com. He's going to talk about taxation from a trader perspective. Patrick Zielbauer, who is with Infinity Futures, he's going to talk about futures and how the margins work. Why different brokers have different margins. He'll talk a lot about why spreads happen and what are the difference between these mile-wide spreads when they show up and when they occur, and then also how do we handle lock limit days. And then Ryan Watkins is doing something. Ryan Watkins, one of the best that I know. Been friends with him for probably over a decade, and he has a tremendous amount of insight on trader tactics and different tactics that traders use for success. So if you want to join us, go to TradersArmy.com/TradersSummit and register now. This is, by the way, a no-pitch event. We are not pitching a product. We really want to just make it a fun educational day. All right, let's go. So the S&P this morning, we're down 54 points. Last night in our live trade room, we had looked at a gap and go scenario with prices giving us an opportunity if we broke down below here. We came to the first demand area, which would essentially be your first decent target, and then it popped up from that point. And now we're seeing prices come back down. I believe that we're going to continue to trade south, trade to the downside. In the gap and go scenario, our stop is up in this region here at 29.98. If you did wind up if you did get in and you wake up this morning and you say, oh, I guess price didn't go anywhere. It gave you a little move away and I say a little move, that was still 30 points. It gave you a 30-point move away before then now just coming back here in the last little bit. Now, it did rally at the European market open, which is always interesting. But we're still going to continue to maintain a short bias. If you're not in, but you want to get to the short side, just wait till we get lower than this 4 a.m. candle's low. So we have this candle as a printed candle. This green one here is a printed candle. We'd have to get lower than this candle's low with our stop going just above that candle's high. If you wanted to try that as an entrance, if you on the gap and go, one, two, three, four, five, 6 candles later, it's gone nowhere. You could theoretically at this point take your stop and move it down to just above the 4 a.m. candle's high so that you minimize your overall exposure and risk. Looking at the Russell, we have a very similar picture. Basically, it's the exact same picture. Breakdown, price comes in, and it's the same picture. You could still look for the short below there in case that occurs. Now, Nasdaq, in our Nasdaq trade, we weren't looking at the Nasdaq the same way we looked at the other markets because the Nasdaq didn't get lower than Friday's low on Sunday night's gap down. It actually stayed above Friday's low, and so we did get below there, but frankly didn't expect it to hold as well. We're getting a bit of a reversal candlestick as of now, and it could be that this becomes a supply level that we're kind of bouncing off of from our Sunday night overnight sessions. See if that becomes a reversal point. I think you could get a little bit of a move down. But all in all of these markets to me are still a bit more bearish than they are bullish. Now, I will say that on the ES, on the daily time period, we are sitting right near a demand area, right at a decent area of demand right in here. So we could see a bounce up off of this zone. I wouldn't be overly surprised. So I think the way to play it is you look at your futures markets for short opportunities, and this would be in your day trading. But then in your longer term things, maybe your options trading, your swing trading style, look to go long on confirmation entries of high quality securities on this pullback. It gives you a chance to find good stocks on this pullback. All right, looking at crude oil. On our crude oil markets, we gapped down, traded down almost immediately, continued to run down for most of the evening before rallying at the European market open here in the last little bit. So I know a lot of people took that gap and go and made a little bit of coin on the way down. Not sure exactly where your target was, but I think that there's a legitimate belief that we can trade down into this 35 region, which is about where we got to, which was our target spot. Looking at that anyway, we've come back up to the origin of this move, but I think just wrapping our lines around the gap area makes the most sense. Next, in gold, gold sold off overnight really hard. Somewhat surprisingly, how far gold sold off in the overnight. And so, kind of looking at where gold sold off from, I'm going to look at this area right here, which is a little wick over wick area here as a potential level going forward. I think that one works out pretty well. Looking for, if we do get a rally back up, for price to head down from this zone. Next would be in our bonds and currency markets. So our bond market, we're seeing a little bit of sideways price action resume after our 4 hour had a big move down, and then we've rallied back up. We are putting in what could, in my mind, become a bit of a double top pattern up here. Now, it could also become a breakout level. So let's put this line here for a potential breakout, provided that I get the basing, would be my third touch. But it also could come down from this region. And so this demand area, if we base in front of it, will be the kiss of death, because I think there's a chance we'll make it all the way down into this area right in here. Looking at our Aussie dollar, so in our Aussie position, I was looking at this one last night for potential breakdown if we got quality basing, which I did not get the quality basing for this on a breakdown. On the gap and go side, it actually did get above the first candle's high, but it just got a tick below the first candle's low. So you may or may not have gotten in that position with a quick and small stop out. I think you still have a chance to re-enter that thing, because I do believe that prices are still falling in there. You might want to re-enter on a bit of basing with a bit of a breakdown. In the euro has not really given us its entry as of yet. We've gotten no real strong entry signals on this one. We do have a bit of a wick over wick supply right up here at this at Friday's open that also could come into play today. Canadian dollar. The Canadian dollar, we did break down in this area. I was looking for a bit more basing, closer basing for this to work. But if you took it 1, 2, 3, 4, 5, 6 candles later, prices have really gone nowhere. So at the very least, take your stop, move it to break even, and you've got yourself a free trade set up on that one, where it should not come back and bite you at all on that trade. Now, the last two markets we're looking at, the Great British Pound and the Japanese Yen. When looking at our Great British Pound level, same thing that we talked about in the other markets. I didn't get the requisite basing for the breakdown, which is why it just popped right up above. We didn't use the gap and go in the pound. We were looking at basing below this level here. It didn't happen in the overnight. So our next level would be this supply area up in this region here as a potential reversal zone. And then the Japanese yen, we actually just didn't mark any new levels in the yen, as we only have this supply level right in here, or this demand level right here for an opportunity to get long. I was going to look at a short below this area here for a breakdown, but then I don't have the room to roam because of this demand area here. So we stayed sideways overnight, and I would still look to that demand area as the place to go. So once again, if you guys have any questions, as always, shoot us an email, support@tradersarmy.com. Don't forget to register for the Traders Summit. We only have seating for the first 1,000 people who register. Last time we did a summit, we ran out of spots because we just had more people register than we had spots for. So please, please register. And then I ask, do me a favor, share this on your with your trader friends. Share this on your social media. Let other people know about this Trader Summit. We're really looking to make it an amazing, amazing time and a great day. So I'll talk to you soon, everybody. Have a great day. See ya.